South Korea's central bank has shifted back to monetary tightening, raising its key interest rate for the first time in 3.5 years, as inflationary pressures persist and tensions in the Middle East cloud the economic outlook. Our Kim Bo-kyoung reports.
The Bank of Korea has raised its benchmark interest rate by a quarter percentage point to 2.75%, marking the very first rate hike since January 2023. This decision by the Monetary Policy Board meeting on Thursday was unanimously backed by all 7 board members. The BOK had previously kept the rate unchanged since May 2025, following a cumulative 1% of rate cuts starting in October 2024. Thursday's rate hike was widely expected, as the BOK had signaled several times that it would raise rates to deal with inflationary pressure. Due to higher oil prices caused by the war in the Middle East, consumer prices posted year-on-year increases of over 3% for 2 consecutive months in May and June, which is well above the target inflation rate of 2%. The governor says that inflation is expected to remain high for a considerable time.
On the supply side, despite lower global oil prices, the effects of earlier cost increases and the weak exchange rate are expected to persist for some time. On the demand side, inflationary pressures are likely to build as the semiconductor boom spills over into domestic demand.
Meanwhile, as exports and investment continue to grow strongly, mainly due to the semiconductor sector, South Korea's growth rate for this year is expected to considerably exceed the May forecast of 2.6%, easing concerns that a rate hike could slow the economy. Yet, as much as the Korean economy depends on the chip sector, one expert says it's important to keep a close eye on where the market is headed.
It has been, the export of semiconductor has been increased more than almost 200% vis-a-vis last year. So tremendous, surge in semiconductor is a driving force for Korean economic growth. Everything, I think, depends upon how the market for, semiconductor will be on the second half of 2026 and possibly 2027. So,
rising household debt, soaring housing prices, and the weak Korean won compared to the US dollar also contributed to the board's decision. The question now is, how much more will the central bank tighten monetary policy in the coming months? Many forecast the next base rate increase to come in October, though some believe there could be a back-to-back hike in as early as August. Kim Bo-kyoung, ArirangNews.